All right, I'm Michael Hartzman. Today is Tuesday, December 9th, 2025. And I'm on, as always, with my partner, Dominic Tavella, both of us coming to you live from Long Island. How are you?
Doing well, Mike. Dealing with the cold. Cold. I guess winter. I don't know if it's officially here, but it's here. Yeah, all good. No complaints.
I officially broke out the scarf and gloves this morning. So I do that reluctantly every year, but I did finally have to break down this morning.
I did take note that we're both wearing sweaters, but hey, there are bigger problems in the world than this. So all good. Hopefully, all is well with you.
Thank God, no complaints. So yeah, let's kind of jump right into it. We had our second week in a row of a little bit of a bounce for the market. So they were all up kind of marginally between 1% and a third of a percent. Quarter to date, I mean, there was a point in this quarter down where the quarter was actually underwater. So it's bounced back kind of nicely. Quarter to date, the S&P is up almost three. The Dow is up three and three quarters, and the Nasdaq, it always seems to be the biggest winner or the biggest loser. It's up a little over four. And year to date, the S&P is up 18 and change, the Dow up 14 and a half and change, and the Nasdaq up 23 almost. And I'll continue to say it. The EFA, MSCI EFA is up 30%. So unless there is some really dramatic news in the next 2.5 weeks, it's more than likely that we're going to have another very solid year for the investment markets in 2025.
Yeah, so two quick thoughts, Mike. What a difference 2 weeks make. I mean, I literally had to swing over and look at the chart. The markets had a pretty significant plus 5, 6% pullback. The major indices, individual stocks, a lot worse than that. Just 2 weeks ago, it looked doom and gloom, and my God, and we're going to retest the lows for March and snapback, right? We pretty much have gained the majority of what the market went down during that period. We've gained most of it back. And then just be careful what you say out loud, Mike, because last year we went into the end of the year hoping and wishing for a little bit more, a little bit of a Santa Claus rally. We got about a 5% pullback in the market. So I would love to kind of coast through 1231, close the books on another really good year, and then we'll start worrying about 2026.
I got you. And look, yes, I'm old enough to remember that we were in an AI bubble 2 weeks ago. Yes.
You have aged in the last 2 weeks, Mike. Yes.
But yeah, I mean, and how quickly things change. You're 100% right. But look, we said it then. We've asked our guests then. We don't know if we're in a bubble because we don't know who the winners and losers are in the tech sector. And in my opinion, we're not going to know for 2 years.
We spend a lot of time on this subject, Mike, and it doesn't hurt to spend another minute on it. Are we in an AI bubble? No. Are we in a company working in the AI world bubble? Yes. Only because we don't know who the winners and the losers are going to be. We may not know for 5 to 10 years who the winners and the losers are going to be. But AI is clearly going to be an integral part of our lives over the next 5 to 10 years. Who the winners and the losers are going to be is the million-dollar question.
Look, Dom, everyone uses AI whether they know it or not. You and I are using it right now because AI is going to give us a transcript of this call. So yeah, AI is everywhere, and it's not going anywhere anytime soon. So I just want to switch gears for a minute in our open because some one topic we spend some time on, but we don't think we spend an awful amount of time on. But I am happy to finally see the municipal bond market will finally close the year, in up fairly healthy fashion. I know I made a comment in the beginning of the year that the muni bond market reminds me of the New York Mets. They always start out great, and by the time the year is over, it's like, oh my God, another crappy year for the muni bond sector. But Dom, this year, if you own 10-year muni paper, you gained a solid 5.5%. And there's nothing wrong with that when you're trying to be conservative.
On what we love to call boring conservative, tax-free municipal bonds, interest-bearing bonds. But what a roller coaster, Mike. I mean, literally, I can put up the charts real quick if we want to look at the dates. But my God, we were looking at the first half of the year where they were negative year to date.
Mm-hmm.
You literally, if you sold, and thank God we didn't, and we didn't have clients doing it, but if you sold, you would have lost money in these boring conservative bonds. And that's because they work inverse to what interest rates do. Interest rates popped higher, values went lower. Now interest rates have gone lower, and we expect that to continue. But as interest rates go lower, the value pops back higher. So this seesaw effect certainly made some people nauseous and worried about the bond market. How many muni bond portfolio managers did we speak to, Mike, this whole year? I've lost count. All of them telling us, don't worry, the market's solid, the market's healthy, hang in there. You'll get paid for being patient. And the good news is we have. It's been a good year in the muni space.
Yeah, in addition to that, we have a lot of local clients. Obviously, we have a lot of New Yorkers. And as it relates to municipal bonds, do not let the cocktail chatter about who is going to become mayor of New York in January sway you from not owning municipal bonds. The death of New York City is highly exaggerated.
And we will look at the individual bonds themselves, the municipalities, that we could talk about the Port Authority, the bridge and tunnel revenue, but we can get into the wonkiness of the individual bonds. Most of the stuff that we have in our portfolios are tied to revenue that's being generated. So listen, I do on a personal level care about who the mayor is and the tone they're going to set. But from a financial perspective, the ability for the city, the Port Authority, the Tri-Borough Authority, the Water Authority, for them to pay their debt, pay interest on that debt, I don't have any worries.
And to that point, I was on a call this morning with the Goldman Sachs municipal bond team. And that was not the topic, but just for the heck of it, I asked. And he said, look, New York is going to be fine. And if you really are worried about any of that, no one's getting free bus rides. The mayor of New York does not set bus fares. It's run by the MTA. He has zero control of that. It was just one example that, things are not going to be given away on January 1st or whatever he takes office. It's just a lot of it, unfortunately, I think is hyperbole and just talking points.
And look, Mike, we specifically are not a political show. We want to talk about money and finances and the economy. But if we look at the presidential cycle, how many administrations have we been through in our lifetime? How many different political tones have we lived through in our lifetime, working lifetime, we're going to talk about? And you know what? This great country survives. It figures it out. It solves it and moves forward. And next thing you know, a new administration comes in with a new thought process. So in regard to the New York City situation, there's definitely some concerns out there. There's a lot of political mood out there. I'm not worried about it from a financial perspective, which is what we need to focus on.
Yeah.
I'm worried about our portfolios, our client exposure. And no one's, certainly I call the smartest people in the room. You mentioned one of them. They've given us no real reason for concern. So for the
Yeah,
time being, we're going to stay the course.
exactly. And speaking of, we don't want to talk about politics. It's interest rate week. And unfortunately, that's become politicized this year. But I do agree with most of the experts that we're going to get a 25 basis point interest rate cut tomorrow. And then we'll have to see what the comments are. But I do think tomorrow the Feds will cut again, whether they have to or not. I'll leave to some people smarter than me, but I do believe they will cut one more time before the year is over.
Not shockingly, Mike, we're in agreement, right? And as these markets have kind of indicated now over the last couple of years, the fact that they do or don't cut rates seems less important than the commentary that comes in afterwards. So in this case, Chairman Powell gets in front of the press and says, this is what we're thinking, and this is what we're focused on, and this is what's important. That commentary will drive the market in the short run. But here's the $1 million question, Mike, and I'd love to throw it back in your lap for the last minute here. Does it really matter whether they will or won't cut rates? What do you think happens to interest rates next year? And I'll leave it to you to give us that final thought.
So we're going to have a new Fed chief next year. That also is 100% in the cards. You would assume that interest rates are going to go down next year because Trump is going to handpick a person who is going to be aligned fiscally with Trump. I think if the economy warrants that, I think that's totally appropriate. It does make me a little nervous that whoever he puts in there also will do what's in the best interest of the economy and of the Federal Reserve, not to do what makes his boss happy. So I do have a little trepidation, Dom, about what happens when we have a new Fed chief appointed.
And those concerns I think are justified. I'm just going to have faith that in general, these are very smart, sophisticated, educated people, whoever he appoints as chairperson of the Fed. And the people around him or her are very smart, educated, sophisticated people. And I just kind of have a gut feeling they're not going to do anything really, really dumb. So they might push it to the middle of the table, but they're not going to go over the edge, Mike. And I'm going to have confidence, at least until I see something different, that I think in general, they'll be cutting rates next year. We'll see a lower interest rate environment. I don't think they're going to do it haphazardly, and I don't think they'll do it recklessly.
Well, I'm glad to see your glass is half full. And I do agree with you, by the way. I hope. I'm going to put in I hope.
And maybe we have 10 seconds, Mike, but a lot of the names that are being bandied about, we know these people well. I don't mean personally, but their reputations, they're not crazy nut people. These are solid, educated, sophisticated people, and they have their own thoughts and their own opinions, but so does every other member of the Fed board. So again, it's not just one vote here, Mike.
Yeah, well, and we do know one of them personally, but he ain't getting the job, so it doesn't matter.
Yeah, we wishful thinking on our part, but no, I don't think he's getting the job. But
Exactly.
we'll
So listen,
save the
tonight,
name dropping for another day.
no name dropping. No, not going to do it. But if you want to call me offline, I'll tell you who it is. We have a great guest tonight. His name is Charlie Wells. He wrote a book, What Happened to the Millennials? Now, you and I happen to have 9 children between them, and 100% of them are millennials. So I'm really anxious to get Charlie on the show tonight and get that question answered. What happened to the millennials in defense of a generation?
Well, Mike, I using that as a guidebook because I could use all the help I could get myself. So
Yeah, well, Dom,
just saying.
not only are they our children, but they're also our heir apparents. So,
And integral in the operation of the company. So we'll keep our fingers crossed on our future.
exactly. So maybe we'll use it as a guidebook. So we will be right back with Charlie Wells, author of What Happened to Millennials in Defense of a Generation. All right, I'm Michael Hartman, back with my partner Dominic Tavella this evening, and our guest Charlie Wells, author of the new book, "What Happened to Millennials in Defense of a Generation." So, Charlie, we'll just start. We'll just start right there. What happened to millennials?
We're getting old. I think that is the big takeaway from this book, which
Welcome to the
basically,
club. Mhm.
yeah, I know. I thought it would never happen, but turns out it does. I thought, everything would be different for this generation, but turns out a lot of the things that maybe we thought wouldn't happen to us are now happening to us, including getting old, thinking about life, thinking about family. And so basically, I've been writing about millennials for my whole career as a journalist, and there came a point when I basically wanted to, put down in words kind of these changes that I was seeing, some of the kind of transformations that were happening. And one of the big things is, I guess if you want to put it bluntly, we got and are getting older.
So, Charles, just to kind of set the tone, and again, a little humor I think is good. So the millennials had a certain reputation. So maybe focus a minute on that reputation, and then more important, I think, how has that evolved?
Yeah, no, that's a good one. So going into adulthood for millennials, and this book really kind of focuses on our adulthood, kind of from 18 onward. And the oldest millennials, who are, from their late 20s to kind of their mid 40s right now, they really kind of started turning 18, the first millennials, in 1999. So kind of a pivotal moment for the country, pivotal moment for the economy, pivotal moment for the stock market, which maybe we could talk about in a moment. But basically, as we were turning 18 and then entering the workforce, a number of years later, that's where people started to kind of make a lot of assumptions about this generation. Things like we were lazy or that we were entitled, that we switched jobs all the time, that we didn't want to work conventional jobs, that we were killing marriage, that we were killing, standard employment. And a lot of those assumptions haven't come to be true, but they were really amplified with this group of people, with millennials, because as we were entering the workforce, as we were kind of becoming adults, the internet, particularly social media, was really kind of front and center, and it was this big kind of microscope on us. And so that's why a lot of these points really got amplified, maybe more than they even were manifesting back then.
So, Charlie, Larissa, who's our producer, who's on the call, I said to her this morning that I look forward to our conversation, and I alluded to Larissa what Dominic just said, and without missing a beat, she said, "Oh, really? 9/11, two recessions, and a pandemic. We've seen enough." And I mean, she had that locked and loaded.
Yeah, I mean, millennials have been through a lot, right? And I think that it's striking though, because every generation has been through a lot. And I think this is something that can kind of be triggering to non-millennials
Mm-hmm.
and annoying, I'm sure, where you hear, oh, it can almost sound like whining, where millennials saying, oh, we went through this, we went through that. Baby boomers are going to say, okay, well, we had the Vietnam War, we had recessions of our own. And then also, baby boomers had to go through the pandemic. They had to go through the recessions. They had to go through all of this stuff too, right? And so I think one of the points, the really big takeaways that I want people to take from this book is, this is a book about millennials. It's a defense of millennials. I go through a lot of different experiences, but I want us to understand each other in a better way. And I think one of the ways that you can do that is think about how, the year when you're born, the kind of group that you're born into, that matters a lot. But so does kind of the stage of life that you're getting into. So, quote unquote, getting older, hitting midlife. That's an important way to understand people. And then also just like history, just like the stuff that's happened to every single person on planet Earth. So you kind of need to combine all of those three things. And I tried to do that in reporting this book. But to your producer's point, and I think the reason why a lot of millennials kind of feel hard done by or feel frustrated is that we were really kind of coming of age, becoming cognizant in the 1990s, in this really big boom time. And, the Cold War was done. We had won on the geopolitical level, on the economic front. The internet was just taking off. The stock market was zooming so high. We hit a surplus. I believe that the number was like 236 billion surplus. Like the Brookings Institution was saying, this surplus is going to continue forever or for a really long time. The big question, in 2010 and 2016, 17, is it going to be, how do we spend this money? Not, how do we get more? And so I think that was kind of our childhoods. It was this kind of really unique moment in time. And then you kind of had this downward fall. And so I think that's a story that a lot of millennials have. And I think why a lot of us can feel kind of hard done by.
But Charlie, and maybe in defense of millennials, right? We get it in the sense that when we're sitting down with these people today, their attitude about money and the market is very, very different than their parents, right? But in all fairness, if you think about 1999, we did have a market crash in 2000, and for the next God knows how many years, we did have a 9/11 that dramatically affected the culture of this country and how we looked at the world. I mean, in fairness, we all generations went through some difficult times, but my goodness, that was a tough decade. We're talking about 2000 to 2010. That was a tough decade from a financial perspective for these young people to kind of cut their teeth.
Yeah, it's like a hard moment to get started. And like there's this phrase in economics research called like unlucky cohorts, right? And like whatever generation they're in, just starting off work in the middle of a recession. I did that and it was horrible. I'm sure that there are other people who are different ages who did that. And it's terrible, right? Like you send out your resume into this void and like no one ever gets back to you. And you're like, is this me? Or is it the fact that youth unemployment is like 1 out of 5 people who want a job can't get one? Because that was the statistic at the time when a lot of millennials were looking for jobs. That was the youth unemployment rate. And so these economic factors really influence how we feel, what we think. And your point about millennials and money, I think is really important. I'm a personal finance reporter. I've been covering millennials since, geez, like 2012, which was at the point when we were recovering from that recession. And I think one of the points at that point and then now is millennials can be, and I would love to hear your guys' thoughts on this, can be really risk averse and perhaps to their detriment. And because we know that investing in the stock market is incredibly important, we know that there are opportunity costs to not doing that. But there's this fear because a lot of millennials were kind of starting out their financial lives in the middle of a recession for years. Even after the recession was over, millennials and a lot of other people in the country thought we were still in a recession. And so if you think you're in a recession for like a decade, that is really going to make you risk averse, and that is to your detriment. So that's a point. But I think something else too, and I think this is really important, is that millennials have actually started to do really well financially. And I'm sure you guys see this in your own work. But there's some fascinating research, and I think this surprises people who are my age. Millennials at this point in life are about a third richer on average than baby boomers were at the same point in the late 80s. So you've got this group of people, and this is kind of a problem, right? Like you've got this group of people who, on average, and I think, we need to think about what averages can do to a story, but on average, they're doing really well. But then there's this story of we got messed up by the boomer generation, are we still in a recession? Are we not? What's going on? So it's people who like might be doing well but don't feel well. And there's a lot of reasons why people don't feel well. We know them, we hear about them all the time, and they're true. But this is kind of something that I try to unpack in this book is kind of busting some of these myths, some of these stories that we tell about other people and then about ourselves.
So, Tom, I'm going to tackle that comment Charlie made about our experience first, and I'd love to get your opinion right after. So, Charlie, we deal with a lot of children and grandchildren of our clients. And I always tell my millennial clients, especially when they were younger, we're going to start out cautiously.
Hmm.
Because I know if I screw this up and you lose money out of the box, you're not going to come back into the market for 10 years. You're
Yeah.
gone. And they always agreed with me. They said, yeah, I'd rather make less. I don't want to lose any money. Then over time, they would get comfortable. They would look at their statements. They would see that the apocalypse is not around the corner, and we would slowly get them more aggressive. But my instinct always was, let me get criticized for being more conservative, because I don't want this person to short sell themselves and be out of the investment world for maybe a decade if I get it wrong.
Yeah, I can hear that.
Don, what's your experience?
Yeah, and address it. I think Charlie was spot on. My standard line with clients is I have 80-year-olds that behave like 20-year-olds and 20-year-olds that behave like 80-year-olds. And the 20-year-olds literally are so risk averse. And their line is, oh, I watched what my parents went through that decade. And people are like, oh, well, the market recovered. It took some of those NASDAQ stocks a decade to recover. And if you owned them through the whole time, maybe you never got your money back. So these people, these millennials watched, even if they didn't experience it firsthand with their own money, they literally watched their own parents struggle through those difficult times while markets recovered. And they are totally, I'd rather be a little bit more boring with this money. I really don't want to take any dumb risks with it. So yeah, it's a strange concept because younger should be more growthy. I find that this particular group is the exact opposite.
And
Well,
to your
something else. Oh,
point,
sorry.
and Charlie, I didn't mean to cut you off, but I would
Oh,
like your input on this. To your point, their parents, their grandparents, right? Their parents
mm-hmm,
lived through the Depression,
mm-hmm, yeah,
right? So their parents are this sandwich generation, right? Because you and I are good examples. My parents lived through the Depression, right? My kids watched us try to make it, through the 80s and early 90s. And I think our generation, Dom, did take more risks with their investment and didn't want to have that Depression mentality.
I think we have more faith in the system.
mm,
I would describe it that way, right? Whether we're looking at companies, individual names out there, I'm like, well, no, they're good, solid balance sheets, good, solid growth. I think, yeah, there'll be a little bit of a roller coaster, but I can wait it out. This next generation watched that really negative cycle. I think they felt it in their bones. And I know it sounds totally counterintuitive, Charlie, but I think they are risk averse. I think we talking them into being a little bit not speculative, forget it
mm-hmm,
speculative,
no,
but
right.
growthy. It's a challenge. It's definitely a challenge.
It's another asset that I think is really interesting for millennials, and I again would love to hear what you guys think, is real estate. Because there are increasingly these stories about millennials being obsessed with it. And I think a couple years ago there was a Saturday Night Live skit about how obsessed a certain group of millennials were with real estate. And this is a funny one because I remember kind of as I was reporting on millennial life, like at 2012, 13, 14, the story was always, oh, millennials are never going to own homes. They're never going to own homes. The housing market is so broken. That really, the housing crisis really was such a huge part of the story of the recession. But now, about 55% of the millennials do own homes. And you think about what millennials talk about, what they think about, it's real estate. And there are studies out there, I'm sure you've seen them too, about how millennials often think that real estate is a better investment than, say, financial instruments. And I think we can kind of debate, the pros and cons of all that, but this is something that's been such a part of the millennial story. And one of the things I did in this book is I followed 5 real American millennials from very different parts of the country, kind of got into their stories. And literally, this asset class is so important to our generation that one person's story is literally the story of them getting a house. And it's kind of cool. Like we hear a lot about people moving across the country to find affordability. They switch jobs, they move jobs in order to get housing because they think it's so important what they do. And one of the stories I tell in this book is how that happened. And it was cool, right? And we are now a majority home ownership generation, which I never thought would happen.
Don, again, I'll just jump in first and you follow up. So that is really a sore subject with millennials on Long Island, particularly
Right.
because they're so freaking expensive here. And you're right. When millennials were in their 20s, they would say, I'm going to have to leave here. I can't afford to buy a home on Long Island. And somehow they've pulled it off, whether they got an assist from mom and dad or grandma and grandpa, or they worked their butts off, or a combination of the three. They wound up staying and they wound up owning homes. Don, what do you think?
Yeah, so I guess I want to make light of it, but it wasn't really funny. The time where we joked about 401ks becoming 201ks, right? But there was no meter on a house. So where these millennials watched market volatility and watched
Hmm.
their parents or even their maybe initial dollars in a 401k become a 201k, they watched real estate stay relatively stable, right? Because they weren't buying real estate and such. So what they've watched over the last couple of decades is a very slow, methodical increase in value in real estate because there's no meter on it every day telling you what the value is, right?
Yeah.
But the market, we turn on a CNBC or a podcast like ours and you hear about it. So they view one asset class as kind of boring, methodical, and increasing in value. And the other asset class, oh, there's all this volatility and drama. I'll own the boring stuff. And I think it still comes back to this their personal life experience where, hey, the boring stuff makes me money and I don't have to take a lot of dumb risks. And whether it's true or not is a whole nother conversation, but I think it's their life experience.
I also think there's this idea of like millennials thought they could never get houses, and then you kind of get obsessed with what you think you'll never have. Like it becomes this like, whoa, like this is such a huge goal for me. This is so important. And I think, we could debate the pros and cons of this, but like, should 55% of millennials own their homes, or should they be focusing on paying off debt? Should they be focusing on like moving to a different area where maybe their like cost of living would be lower, or they could earn more? Like I think there's a lot of questions about that, but like I think something I try to explore in this book is how the economics of a certain era, like it shapes what you think and how you feel, but that might not be good. And I know you guys have to deal with this every day. Like the way you feel is maybe not what your portfolio should look like, right? Like you've got to check the emotional element to it, which is so important.
So it's not lost on us that, in your other life, in addition to being an author, you're a Bloomberg reporter. And I love how you sneak in asking us questions. Well, we're supposed to be asking you questions. So it's
Can't
a,
help it.
I love it. I love it. So look, another thing I want to bring up is technology. I know in the preface you mentioned the Tamagotchi of all things,
Love it.
which brought me way back to when my daughter was a child. And this was this archaic little device. I think it was a chicken, and you're like an 8 or 9 year old. And then Dalmano Ashley or Lisa had one, but you had to keep the chicken alive, right? So that was the technology then. And we'll look at what millennials, the access to technology now. How is that not mind blowing for them?
That's a great question. I think a lot of those early devices made us good at dealing with a lot of stuff. Like that little chicken that you had to keep alive, like that beep, beep, beep. The crazy thing is now that's kind of like a smartphone, or like your boss is emailing at work and it's like beep, beep, beep. I think I've got to keep my career alive, just like I used to keep a chicken alive when I was a kid. But I think another thing too that I tried to explore in this book is like, is technology inherently good or bad? Like, and I think back in the 90s, when the internet was booming, when everyone was getting computers, when you're getting those AOL CDs sent to you left, right, and center, there was a sense like technology was really good. You keep that going even after the dot-com bubble, when a lot of millennials were entering the workforce, when we were in college, social media was booming. It felt like this amazing thing. Like it brought people together. It made you feel less alone. Flash forward like 15 years, and now the thinking seems to have changed a lot. Social media is bad. Like we've got bans on it in Australia this week. There's this whole big story about that. That's for teenagers. Um, and in this book, I try to chart, how people formed relationships with each other on technology, how that kind of felt really good in the beginning, but kind of as they grew older, maybe it didn't feel so good. And maybe all of this stuff, maybe it's not necessarily inherently good or inherently bad. It's like the people who are using it. And I think this is relevant today because of everything we're hearing about AI. And I think so much of the conversations that we're having about AI, about how it could change the economy, how it could make things so much better, how, are we in a boom or not? I know you guys earlier in the program were talking about that. This feels a lot like the 90s in many, many ways. Obviously, there are key differences, but I think this is important because millennials are starting to have children. And this is something with the people in the book, the people that I reported on, and I'm sure you guys deal with this with your clients. They're starting to, millennials themselves are trying to have children. They're starting to think about their families, how they raise them. And there's this quote in my book that takes us back to a book about millennials in the early 2000s. And the authors were kind of, it was a guide to kind of how to raise children at the time. And one of the things that the author said was, the most important thing you can do with your millennial child is to set their expectations sky high. Like set their expectations as high as you can get them, because then they'll do great stuff. And I think that was a mistake, right? Because it was a tech boom, it was that surplus that we all know about. And that kind of didn't pan out. A lot of the great things have happened since then, but a lot of incredibly bad things have happened. And so I think as millennials start planning out their lives, as they start raising their own children, maybe they want to take the opposite advice as we enter this era when, the American economy is doing pretty well, the stock market's doing really, really well. We've got this new technology. I think that we as a generation can kind of learn from the past.
It's a great point, and it's a great time for us to take a break, Charlie. And when we come back, I also want to ask you about millennials' relationship with Gen Z and Gen Y,
Whew.
because there seems to be a disconnect there as well. So noodle on that for a few seconds, and we will be right back with author Charlie Wells, who just wrote a book, What Happened to Millennials in Defense of a Generation. All right, I'm Michael Hartzman, back with my partner Dominic Tavella and our guest this evening, Charlie Wells, author of the book What Happened to Millennials in Defense of a Generation, for our last segment. So, Charlie, let me ask you this. Dom mentioned when we started the conversation how millennials had a reputation, and you've laid out perfectly it's not deserved. Millennials have accomplished a lot. When I mentioned to Larissa this morning when I was doing my research, um, she said it's not us with the reputation; it's Gen Z and Gen Y. They're the pains in the neck. So, and I've heard that before. My son, who's a millennial, has mentioned that to me. So, what's going on there? What's the issue that you guys have with the folks younger than you?
So this happens with every generation. And this is the thing that I try to do with this book, where I'm kind of saying, like, guys, like, enough. Okay, like let's understand each other a little bit better. Everyone's different. As we've been talking about, the economy changes people, history changes people, how old you are just changes people. And pretty much every time a new crop of people enters the workforce, these tensions start to arise. And I think, we all know from working in offices and workplaces, you don't really get to pick the people that you're around. Like, that's kind of where a lot of people interact with people of different generations, right? For, many reasons. That's when a lot of the kind of intergenerational kind of bickering, some of the reputations can start. And basically, I think it's kind of understanding that as a new crop of people comes up, they're going to be doing things a little bit differently. They're going to be reacting to the economy in a different way. But as I kind of show in this book, eventually people sort of want the same thing. Like they want a nice place to live, they want a nice family, they want to do a job that they think is interesting, they want to have fun, they want to feel secure. Like that kind of all adds up. And, Gen Z right now, they wear weird clothes. They seem to have bad attitudes. Like they struggle to talk in meetings because they've been using Zoom. And these are all kind of initial observations we've got of these people as they enter the workforce. But they will probably kind of reach toward the mean as they go forward.
So, Charlie, maybe kind of picking up on that, and I'm going to say in defense of millenniums, but and it's not a financial question, but I'd love your some feedback on this one. I'm finding, and we're clearly biased, but I think it's across the board. These millennials are great parents. I mean, I want to really raise my hand and go way better than I think I was when I was raising my kids. Their focus on their children and raising them, I mean, as a group, I think is way above. I don't know if I would use the word normal, Mike, but I would say fantastic. Where both parents are integrally involved in raising those kids and doing a good job. Where do you think do you think it's correct? Number one, and number two, where did it come from?
Yeah, I think that's really interesting. And I saw that in the reporting for this book, right? There are, a lot of different families that I interviewed from very different backgrounds, different parts of the country, and children really come front and center in a lot of their stories. And, I think a part of it is, both parents want to play a role. I think that is a societal norm that's changed across the board where, the mom wants to be active, but the mom also wants to work. The dad wants to work, but the dad is also wants to play an active role in the child's life. And that's something that's changed a lot over time, right? And it can be fun. And a lot of these millennials, they like that I talk to, they really enjoy, spending time with their kids, both, the mom and the dad. And I think something that struck me in reporting this book is this idea of like a bridge, that these millennials want to kind of be a bridge to the past, but also to the future. So they want to, help guide their children with all of this new technology that we're getting. Like, we read stories about young people being friends with AI, right? That sounds crazy. But I think a millennial approach to that would be, all right, I was growing up when Tamagotchis were everywhere, when AOL Instant Messenger seemed like this kind of dangerous new thing. Let's work with this, but then also remember life even before the internet. And that's something that a lot of millennials also remember. And I think this connects us to prior generations where we remember what life was like before everyone had a computer in their pocket and had earpods in all day long, right? We remember what it was like just go outside, get lost for an entire day, come back, and your parents were like, okay, dinner time. And I think that it's a kind of a melding of the worlds, right? You can try to have the best of both. And that's what I found in this book. That's what people want. They like a lot of this technological development, but they remember how good it felt just to be bored, right? I think a lot of anxiety comes from people who think we don't have those values that we had in the past, but they're still there.
Charlie, I'm gonna you know make a comment in defense of millennials also. Whatever criticism we may have of millennials, it's our generation's fault, right? Because we raised them.
I don't know. I don't know.
So,
Yeah.
and I guess what I'm referring to is the whole everyone gets a trophy generation, right? I mean, we raised those kids and we didn't want them disappointed. And in hindsight, it's okay to fail. It's okay not to win first prize. It's if you're 29th, you don't need a trophy. I
Yeah,
mean,
I think
man,
this.
did you want a trophy? Did you? I mean, you're a millennial. Did you
I love a
feel?
trophy. But I love a trophy. I'm not gonna say no to a trophy, but what I will say is I think that like I do address the self-esteem movement in this book, and it's something that so many millennials remember as kids, like being thrown like a koosh ball. There's this game you used to play where you threw a koosh ball in school at someone, were like, you're the best person ever, or like then you had to like throw the koosh ball to someone else and be like, you're like the smartest person ever. And I think what this did to a lot of millennials was it made us actually not like that kind of feedback. And you're like, okay, but could you tell me the truth? Like, I would love for you to kind of tell me what's actually going on. And one of the people in this book, who had a lot of that feedback, actually now goes to retreats where she sits across from people face to face and gets honest feedback from them in real time, right? So that is like the complete opposite, like harsh, cutting feedback. So that is the complete opposite of you are the most wonderful person in the world. So, I think blaming boomers for the way millennials are, I think that's not fair because there's so much that goes into what makes a generation, right? There's the parenting, but there's the economy, there's, the weather, there's the government, there is also people themselves, right? Like millennials have agency. So I think taking all this into account is really important. And that's what I tried to do in this book.
That woman could have become a financial advisor, saved a bunch of money, and gotten feedback in real time
Whew,
a lot quicker.
whew, I can't imagine.
Dom, it's all you. That's all I wanted to say.
Yeah, so I'm just going to tie it back to we are a financial services company and industry, and how they feel about money. So what we're starting to see the early stages of it, but these young people are coming into some pretty substantial inheritances.
Yeah.
A lot of them are from the baby boom generation, the grandparents, not necessarily the parents, but they're coming into some, the baby boom generation created an insane amount of wealth, and now we're at the early stages of that wealth is starting to cascade down to the next generation and the next generation. And these millennials are inheriting some really sizable amounts of dollars, right? Curious your feedback on how they feel about these dollars that they're coming into their lives.
Yeah, I think like there's a number of studies on this. Like I think some figures are like $90 trillion of the great wealth transfers coming down the pipe. And I think, that will happen. I think, again, it's like something that can kind of skew things with millennials is like average versus the median, where like this could be like a smaller subset of a population than we think because, inequality is relatively large. Or like maybe a lot of this money is tied up in housing wealth. So I think that like millennials counting on that, like they need a better plan than that. But you're right that like the inheritance process has started. It's starting earlier than it used to in prior generations. But I think one theme, if I'm thinking about this, if I kind of put my millennial lens on, is perhaps inheriting money, perhaps earlier, if you are in that fortunate position, but still feeling poor. And I think some of this could be reality in that millennials have significant amounts of student debt, right? That's something that has been a big factor as kind of the cost of college has gone up. I think it's something like $1.6 trillion in student debt. That's an issue, but I think there's something that, in my work life that I write about a lot is people who are doing pretty well, but just don't feel like they're pretty well off. And I think a concern that I would have is millennials get this blessing of an inheritance, or those who are fortunate enough to get it, and then don't feel like they're well off. And so I think that is a kind of like mental trap. And then that can shape your investment decisions, that could shape your financial decisions if you are doing well, but you don't deploy the money in the way that kind of improves your life. I think that's a concern I have, and that's something that this generation will have to deal with.
Charlie, did you start to research this book before, during, or after the pandemic? And how did the pandemic affect the outcome?
Yeah, that's a really great question. So I kind of started getting the inklings before, but then during that period of the pandemic, you got a lot of time at home to think, and that's when really the kind of germ of this started. And it was really interesting. And actually, there were reviews of my book, and I think one of them was that I didn't write a lot about the pandemic in the book, and people hate talking about it. really, like, there are articles in the New York Times, in the Wall Street Journal, in the Washington Post about how people hate talking about the pandemic. And there's tons of reasons why, but I think one of them is it was such an awful time for people, whatever they were going through, whether they lost family, whether they lost jobs, or whether they were fortunate enough not to. But it was just, I think there's so many reasons why it's kind of hard to talk about. And I interviewed people for this book. I interviewed 5 people across the country, and they really didn't want to talk about it. But I do think that it influenced people in ways that we don't even understand yet. And I think one of the points that I, again, tried to make in my writing is, we need to understand the past in order to have a better future. And I think as I was writing this, it was that moment was still pretty raw in a lot of people's minds. I think they were still kind of coming through it. And I think a lot of the points from the book was like reflections that people had as they had spent a lot of that time at home. But I think the big takeaway, at least so far, and I think we'll understand more as time goes on, is this idea that, quote unquote, everything would change. I think that was something we heard a lot in the pandemic again, but like query whether or not that's happened, right? Like we've now come out. The economy has kind of gone back to the way it was before. There's all this talk about how cities were dead, or how the office job was dead, or how all these things were no longer, but they're back. So I think that was an important learning.
Look, obviously being a little bit older, we look back at 9/11 in 2001, and our group still has a hard time talking about it out loud. We all lost friends and colleagues, and it changed our lives completely. I think the pandemic did it for the millennials. I think it was an issue of if we're going to die, we're all going to die together. I don't know that maybe us being a little bit older thought that way, Mike. But I think the younger people thought it was real and it could happen. And I think it does shape their lives and their thinking going forward.
Yeah, absolutely. And unfortunately, you and I were in the age category. They were talking about comorbidities. So yeah, it was no picnic for us. But but you know, so just to dovetail on that question, and I know you work in London, large city like New York. Is the people are coming back to work, aren't they? I mean, I know for you it's the middle of the night, so you're not in your office. But did Bloomberg bring people back, or do you have the freedom to work from home? And do millennials feel differently about it? Is it what's important to them? I guess not the Gen Zs and the Gen Y, they want that freedom. Millennials are in the middle. Like Dom and I like going to the office. Where do you guys fall?
Yeah, I think this has been one of the kind of big kind of divides, and something that's been really interesting is, I think the big narrative was offices are gone. I think then, of course, offices are back, and I think one of the most striking stories to me is there's a story that young people don't want to work in the office.
Right.
But actually, when you look at surveys now, you are finding that it's the younger people who want to be in office more than anybody because they've realized they don't learn on their own. It's really hard to do that over Zoom. And so they want to be back in. Millennials are kind of in the middle where it seems like they like the flexibility. They, benefit from that. There's, financial benefits, there's some efficiency benefits. But also there's costs, right? Why did you not get that promotion? Is it because you weren't in the office and because you were at home? Or was it something else? Are you feeling lonely? There's a loneliness epidemic in America right now. Are you feeling lonely because you're at home all day long, or is it something else? So I think within the millennial generation, that debate's pretty live. Um, but I think there's trade-offs, and I think it's not what anyone would have expected. It's not that simple narrative of no one wants to go into the office anymore.
And Charlie, you certainly can argue that they got comfortable because of the pandemic, that they can do this hybrid work. They don't necessarily have to be in an office and there every day anyway, right? So maybe that's one of the outcomes also of the pandemic. They got comfortable with this idea that, hey, I can have the best of both worlds.
I can do the best of both, but also I think there is a sense of like, I don't want to be on Zoom all day long, right? There's a sort of like reaction to, and it's like people, missing like work drinks, or they missed work friends, or there's a lot of other kind of, or maybe they even miss their commute, which is going to sound crazy to anyone who has to deal with a daily commute. But there's stories about people who miss that too. And so it's kind of like you think one thing, but actually, like as time goes by, it actually might be different than you imagined.
Charlie, we have to wrap this up, and I just want to again show everyone the book. The artwork, by the way, is fantastic. Congratulations.
I don't want to blind
Congratulations on the
anybody.
book. So tell our audience, our listeners, our clients where they could buy the book. You have a website? Is it on Amazon? Where can they pick up the book?
This is going to sound very millennial, but the best thing to do is just Google Charlie Wells Millennials and it will come up. But it's also on Amazon, it's on Barnes and Noble, pretty much wherever books are sold, you can find it. And yeah, thank you guys so much for having me. And thank you for reading.
You're welcome. Dom, you want the last word?
Just thank you for giving us a little bit better insight, maybe even our own children in this case, but certainly young clients and how to deal with them. And I look forward to maybe on your next book and continuing the conversation.
Thank you so much.
Thank you, Charlie. Have a great holiday season. And Dominic and I will see you next time on the Lebenthal Report. Have a good night, everybody.
Good night, all.